Welcome back to another video. Today I'm going to do a recap of my trades. I made about $260 and made some mistakes that I want to talk about and how that can help you moving forward. So also I wanted to mention I'm doing a 5K account challenge, and right now it is about 13.8, and I started this challenge I started in the beginning of the year, and right now I'm on week 15, and the goal is to try to reach 100K by the end of the year, which is doable if you just double every 10 weeks, just about. I also have a compound interest sheet, and basically each line here stands for a week. And if you look here for the week of April 11, I'm actually ahead. Technically I should be at 13.4, but I'm at 13.8 right now, so I'm a little bit ahead. Basically for next week the goal is to be, at least at 14.2, and I use this more so for the risk. I don't focus too much on the profit. The account balance kind of tells me what to risk. So if you look at this line, if I'm going to trade every day, try not to lose more than $80 every single day, because I don't want to have a drawdown of more than 3% for the week. So my max loss is $400, right? And then if you look at by the end of the year, potentially the account could be at 116 if you just do 6%. So right now I'm ahead by 1 week, but gotta keep on focusing on the risk and keep taking the edge and with minimal risk. So without further ado, I wanted to get right into it. I got in 932 and then scaled out by 940 for Nvidia. So for Nvidia 932, I seen it push up and about to break high of the day, and also went up over the RT. I call it the RT because it's like the resistance trend line, and that was bullish. Now zooming out here, I had an initial stop loss under 213. It never hit it, and then by 940 I was completely out right here because I was concerned that it's going to reject and come all the way down. So I just took profits and stopped trading. Now why did I stop trading? Because I looked at the P&L and I seen I was up 367, and instantly I just felt attached and I didn't want to give it up, even though I had a lot of plans to go long and get calls on Amazon or Tesla, SPY. I was just bullish because of how the market held. So if you can see here though, sooner or later FOMO kicked in and I almost screwed myself, and I ended up putting at one point almost $3,000 in tomorrow's expiration. Now just so you can get an idea of how stupid this was, ideally I don't want to put in more than 2K in a regular call or put that's like has 4 or 5 days expiration. The fact that it's expiring tomorrow means that I shouldn't even put in 2K. The most I should put in was maybe 1K or even less. So this was just straight FOMO. And not only that, but what's even more stupid is that I went and got a put because I got mad that I missed out on this entire Amazon push up, especially since I had all these levels ready and I wanted to catch it, and my signal and my system told me, this was a play. Getting calls here at 3,000, 30.10, 30.40. So I just completely missed out, and then end up getting puts here trying to catch it. Could have gotten screwed and lost maybe like 1K or more, but ended up getting lucky and cut the loss at only $100, right? So what do I learn from this? What I learned from this is that, again, goes back to the ego. When you're up X amount of money, you're susceptible to not want to risk anymore. And the solution for that is identify the risk and be willing to lose something. Just like how I was willing to lose something when I entered Nvidia, when I exit Nvidia, risk that same thing. Like if I risked 100 on Nvidia and made 300, if you see your edge, it's 100 and it's a high probability trade for you, risk that same 100. Worst case scenario, now I would have been up 200. But instead I end up risking 100 on a very stupid play because of emotion. At that point, at 327 when I entered, FOMO, the emotions, was stronger than logic, right? My fear of missing out was stronger than my fear of losing my profit, because I could have lost my profit and then some and ended up being big red on the day. But again, got lucky, and the idea now is to just reset, focus on risk, forget what you missed out on, and then take it from there. So now, how am I going to look to play this moving forward? That is an amazing question. First, I want to look at Nvidia because it didn't push up as much as Amazon, but in terms of levels, it stayed in the same range as yesterday. So, and this trend line, can't use that anymore. So, what I am going to be watching is 225 level, and then also, 225.37, and then 225 flat. The high of yesterday, and then the open of the day before. The high of today and the open of yesterday. And I'll create that rectangle. I'll extend it, and then potentially I'll look to play the levels. Now, if let's say we pull up the hourly, it's kind of ranging over here. So one thing that I can do to avoid getting caught in the sideways action is draw something like that, and now wait until that breaks, right? You do not want to get caught in sideways action. Now, the levels that I'm going to look to play for Nvidia are over 224 or 224.50, and if I want higher probability, maybe even 225, or maybe just scale in. And since it's kind of in a sideways range, I'm more likely to play next week expiration as opposed to this week, because it's same day expiration. You can really lose a lot if it stays choppy. So I'm focused on risk, so I don't want to lose a lot on theta. So I'm gonna most likely play next week expiration. Maybe grab some 225 calls or 230 calls and try to catch the pump. And that's assuming that SPY also keeps pushing, because as you probably already know, if SPY keeps going up, it's going to take all the most stocks with it. Now, what I like here is that this is a bullish engulfing, which is a very strong pattern, but it can also still go sideways, and it can also still crash. So the bulls might have won today, but there's no predicting what's going to happen tomorrow. It could go up, it could go down, it could go sideways. Now the bulls have the upper hand, potentially with the reversal, but got to keep your mind open, and got to understand that it could also crash, right? So these are the levels that I'm playing for SPY. And then for Tesla, I'm playing these levels right here from 1027 to 1040. That looks like a big gap. Interesting. And I don't think there's any levels between that. So over 1027 could be a very strong play up to 1040. That's a potential play right there. But what I'm more concerned about, you got the high of yesterday 1021, and then today 1026. 21 and 26 is very key. We'll draw that. And then from here, I'm gonna just wait for the 27 break, and then that could be potentially bullish. Today was bullish also, but as we all know, ego kicked in. I did not want to risk any money. I wanted to protect myself. Just like how when you're down money, $200, you protect yourself by keep on trading to make it back, right? Or you protect yourself by holding so you can make the money back. And during trades like that, I would end up holding the stock for 3 hours and then end up trying to break even, and either I do break even or I end up just taking a huge loss. If I just do that with the winning, that could potentially be a game changer. So imagine I have a profit target and I bought here, and then as it's going to the profit target, let's say that in my mind I think that the profit target is my break even, I'm more likely to hold it as opposed to thinking, okay, when it goes down, I'm going to make a lot of money, because we kind of sell too soon when we know that we're up money, which is what happened with Nvidia. I just completely, sold the trade and just stopped trading, even though Amazon went up $100. Again, it all just goes back to ego, trying to protect yourself. But it's actually counterintuitive, because the ego makes you cut winners short and let losers ride. So that's the levels I'm watching for Tesla. And then Amazon, Those are the lows right here. AMD is another one that I'm very interested in. Formed somewhat of like a piercing pattern here. A piercing pattern is when a green candle covers more than half of the previous red candle, and after a downtrend. So we could potentially see 101 tomorrow for AMD, maybe even 102, 103. And key levels that I'm going to be watching there, this is kind of similar to Nvidia. It's moving sideways. It's like in the day before's range, or most of it. So, yeah, all of it actually. So what I'll do here, same thing with Nvidia in terms of just trying to get that zone and then seeing what happens. What does it break first, and then take it from there. Now I'm looking for if there's a certain resistance that I want to watch out for. Definitely previous high, so that 99 level is key, and then the overall 100 psychological low. Let's see what else we got. We had Zoom push up like crazy. This is a very strong move and the volume is very high. Could continue pushing up. Moderna pushed up also, one of the bigger gains today. Peloton, nice move, up 5%. As you can see, most stocks on my watch list pushed up because the overall market pushed up. So that's pretty much it, and thank you for tuning in. See you on the next video. Oh, don't forget to like, subscribe, and comment. Do all that stuff. Thank you.